welcome to IVCA Conclave 2017. I have with me Mr. Nishith Desai from Nishith Desai Associates. Thank you so much for speaking to us, sir. What are your key takeaways from the IVCA Conclave?
Oh, I think a lot of takeaways. We have covered a lot of mileage over a period of last a decade or so, but a lot remains to be done. The most important takeaway is that there is so much opportunity for India to attract alternate capital, what you call VC private equity. And this is the time, okay, when even though growth rate might have tapered off a little bit, etc. But I think this is the time. Why this capital is important? Because it can come quickly into the country and stay for a longer time. If you look at joint venture or foreign normal FDI, the process is very long. Okay, you have right partner to be identified, right governmental approvals to be obtained, right shareholders agreement has to be, whereas in this particular instance, there is some degree of standardization of understanding as to how the investment will be made. What are the expectations of the investor? What are the expectations of the founder? What are the expectations of the, venture capitalist and, stuff like that. So broadly, there is some understanding because this is a whole class of investors who have, invested for a long time. So they know what kind of thing they are expecting. On the other side, the founders also know what they are going to expect. So they're mentally prepared, and founders don't always fear that, they will have to give up the company, even though they might ultimately get exit and other kind of stuff. But it's founders continue to remain in the driver's seat, in many ways, unless they mess up or don't do things certain right. Joint ventures, on the other hand, have, different set of expectations that somebody will come with 40% now and then require 50% and then actually take over the investment, technology transfer, competition, non-compete, all these things do not bother, the promoters, what we call in India, or the founders. So that way, this capital is very quick to come. There is already a pool available overseas or elsewhere in the market, domestic market as well. It's all committed pool. So quickly, as soon as something is done, immediately money can come into the country. And they stay for a long time.
So you've seen the venture capital market changing over the last few decades. So if you can say, what are the significant changes that you've noticed?
Well, just to go back into history in early 90s when I started talking about fund in India, most people thought it was about cheat funds, golden plantation fund. There are a lot of cheaters in that industry. So they could not differentiate between what is venture capital fund and what is private equity fund. And even people could not believe that how can people invest without expectation of some minimum guaranteed return. And to explain to them that, here is a risk capital coming. They are not expecting minimum guarantee or buyback to start with, And it was that kind of time. To today, I think the awareness is very, very large. Both public and the government has begun to understand the importance of this industry. I would think that there is still a lot more scope for some of the government departments to understand the whole ecosystem of private equity, how does it work, And I think SEBI has made a great effort in getting it right. Other departments have, FDI norms have got a little easier now and more easier every day and stuff like that.
Right. Yeah. What more would you like to be seen, and especially say about tax? Are there any more reforms that you'd like to see?
I think this is an elegant question, I would say. This is where I feel that tax department needs to understand the complete ecosystem of private equity venture fund. We had consistent problems, making them understand what is this about. Right from the pass-through status, it took several years. Number two, at this point in time, a lot of litigation has been happening and it's sitting in the courts. Now look at what is this private equity or venture capital fund. They pull money from several people and invest in different industry or different companies. So the pulling of money on one side and de-risking by investing in different portfolio companies, correct? At the end of 6 years, 10 years or something like that, they have to return money to the investors.
Sure.
Now look at the plight. I'll just give you one small example. There is so much litigation, a lot of funds have been sitting in the past. Now typically when the litigation happens and large investments, 100 crores liability, I'm giving an illustration, comes up. First thing is you have to deposit money in the, some amount has to be put in the tax department's, kitty. Now from ITO, matter goes to the commissioner, commissioner to the tribunal, tribunal to high court to Supreme Court. This is a normal process, and a lot of time, most of the cases have been won by the taxpayer. About 80% of the cases go in favor of taxpayer at the tribunal level. Now, department will go to high court, okay, fine, and then go to Supreme Court. Problem is that if there is a capital gain, substantial capital gain or otherwise that has been made, because the matter is now in High Court or Supreme Court, fund cannot give it back to the investors. So today, if the rupee dollar rate is say 50 to a dollar, now because of gains have been made, India has a good story to tell a foreign people that look here, you can make money if you come to India. What has happened is that 50 rupees you sold the shares, and at that point of time I can remit say 100 or whatever it is. But because I cannot now distribute, I am not certain what would happen in High Court, what would happen in Supreme Court.
Right.
So, you're sitting on a capital, you can't give it back to the investors.
That uncertainty.
Uncertainty. In the meanwhile, the rupee rate has gone to 66. So, whatever gain, whatever great story India had to tell is all wiped out. Because now instead of getting profit from India, because of exchange fluctuation, the same 50 rupees sitting is getting me a lot less dollars, right? And therefore, we are, after creating a good story, we are losing out. And that is the problems. And today, let us not forget that developed countries are competing with India. Look at what has happened after Trump's administration, right? There is already upsurge in the economy in the US. Interest rates have also been going up. US investors are the largest investor in this space. 70–80% of total investment comes from the US. They would think, right on my door, there is an opportunity to invest. Infrastructure in the US has tapered off because it is now 60–70 years old. They have to build roads, bridges, these, that. They need investment on that side. On the other hand, there also legal infrastructure is clear. Risk weightage factor is better in the US. So they would think that I have same dollar. Should I take a long-term bet with lot more risk, and even after getting money, I am losing. So these are some of the things tax department needs to understand. The needs of private equity, venture capital funds is somewhat different than a normal Vodafone or somebody else coming to the country.
So last question to you. You say that as US should be the tech hub, India should be the social hub vis-a-vis CSR. So
you touch my heart and favorite subject. I'm, apart from all the thing, I'm really very passionate about the social sector and been working on a lot of social businesses and technologies as well as in the. So the premise that I have is, if Silicon Valley is a hub for technological innovation, India is a hub for social innovation. We have to create more capital, because the new models that India will develop, the scalability is high in India and the cost of failure is low. That's why we can do a lot of experiments. Our models can be exported to other countries. Now, what I am trying to say is that let 10% of the CSR money be invested in social venture funds. Okay, what I am saying is 0.2%. 90% you invest whatever CSR guidelines are there. Allow them to invest in social venture fund. We have a scheme under SEBI Social Venture Fund, but after several years, how many funds are? One or two, or they are also not worth the name.
Would you like it to become mandatory?
Well, I would think that, see, when you do mandatory, it looks like forcing. But if you give that space, and then 10%, that is 0.2% of the 2%, if that can go into social venture funds, it will give a big boost. 25,000 crores are coming into CSR pool every year. If you look at profit making company and 2% of the profit, etc. Today, almost over 25,000 crores of rupees are coming. About how many billion? $3-4 billion are coming. If we can allow little amount, 10% of the social CSR funds can go into social venture fund, we will make our scheme viable. Sure. Why should we have a scheme which is not taking off? Everything we do, that's a problem we find. Venture capital fund, why should it not allow CSR? Because ultimately it's also social. Sure. It creates largest employment. Now, just to give one point here, we came up with the scheme of eligible startups, correct? We have our approval and other benefits available. But I am told 75% of eligible startup applications have been rejected. So what is this regime we are creating where people can't comply with? Sure. You know, same way social venture fund, after several years, you got only one, and that also I do not know whether it has
not
really
only
taken.
Reforms, but implementation or
so
execution.
We are trying to say we are incentivizing startup, we are incentivizing social venture funds, right?
Yeah.
But it's not taking off, then it's no use wasting time.
Correct.
It takes so hard when I go around the world, we try to sell India story to the world, right? But it's so hard to get attention of investors. First thing that comes up, instead of talking about opportunities to the people, they ask, what about tax? We hear there is a lot of tax problem, you know. To explain our capital gains tax regime is the most difficult thing. We have 5 minutes to explain. You know, their attention is to understand Indian opportunity, but they get so drawn into this. All that we should do, we should remove all the capital gains and just have only small STT on any kind of capital gains.
Correct.
Okay, irrespective, just have. So easy to manage, so you will not have to give tax credit, no other thing. If it whether house property or whether it is shares, securities, any transaction, just streamline the process, put 0.125%, whatever it is. You have no dispute, no hassles, no tax planning. I am a tax lawyer, I lose my job, I don't mind doing it for Government of India. But I am trying to say that why do we complicate?
Matters.
Nowhere in the world we see this kind of problems.
Pleasure.
And at the same time,
Pleasure speaking to you.
No,
sir.
thank you so much.
So
Appreciate
much
your inviting me, and wish you all the best.
Thank you.